What's good everyone? So this is going to be a slightly different video. This video is actually tailored for the people that want to learn about trading and are serious about trading. This is going to be a complete A to Z guide of how to trade, and it's going to be completely uncut. I'm just going to give you guys as you can see on the screen, this is the parts that we are going to go over. And the people that are serious about trading and want to learn more, this is everything you need, and it's going to be inside of a 1 hour lecture. And before we get into the video, I want to go over a statistic for you guys right now. So if there's 10,000 people that clicked on this video, only 1,000 people have watched to the point I'm speaking right now. And after this, there'll only be at least 100 people watching to the end of the video. And that says a lot about trading itself. People want this business to be a get-rich-quick scheme. They want to make money fast. Although this is the business of trading, you can make money fast. However, it compounds long-term. An example that I like to use is understanding that it takes 4 to 6 years to become a doctor. So that is a profession that you can go into and you can make good money from. And trading is completely the same. The more time you put into this and the more time you put into the right resources to learn about the market, it will reward you. And there's a lot of smart people out there, and over time in trading, you'll understand that working smart is much better than working hard in trading as well. So what I mean by this is finding the right videos, finding the right mentor, and finding the right subjects to study inside of trading. And this is the only shortcut, I say this quote unquote, in trading, when you find the right resources to learn from, the right mentor. So as you guys can see, this is part 1 to 5, and I'm going to go over all of this in this video. However, if you guys would like a PDF version of this, I can provide that. All you need to do is like and comment the word PDF. Once you have commented PDF, you don't need to do anything else. You will receive a message in your DMs, and from there you will have access to the PDF. Okay, so let's begin. So first of all, how do you select the right currency pair? So I know a lot of you guys trade Forex, and we are going to go over the futures market as well. So how can you find the right Forex pair to trade? So this always comes down to understanding order flow that we are going to get into. So once you understand the order flow, so I'm talking about the high time frame order flow of the currency pair that you're looking to trade. When we go into low resistance markets, these two are going to come hand in hand, and it's going to clear up a lot of questions for you guys. But first of all, you need to understand order flow. And what is order flow itself? So when we have a bullish market, so we are trending to the upside and we're trading higher. So what is supporting price to trade higher in this price leg? We will find down close candles supporting price. So as you can see, when we have this move to the downside, we will have down close candles printing here. And why do we have down close candles printing here? Because there's usually an area of fair value that they reach into. Once we get into the area of fair value, and once we have the reaction away and price closes above the down close candles, we will make a high. Once we make the high, we have closed above the down close candles. So what does this suggest? That the market has changed its state of delivery. So the order blocks which form when the market changes state of delivery are high probability order blocks. So I want you guys to understand that again. When the market changes its state of delivery, we close above the order block and the market flips from a sell program into a buy program. The order blocks which are formed and change the state of delivery, they are high probability. And from this price move to the upside, what can we expect? We can expect areas of fair value to be offered. So fair value gaps with a order block which change the state of delivery are very high probability. So when you are bullish, you want to look at down close candles to support price to go higher, and you want to look at up close candles to support price to go lower when we are bearish. So okay, so we'll go back to this fractal. You guys can see that we make the down close candles in this price leg, price trades higher. We make a high which change the state of delivery, we come back into a fair value gap and the order blocks which change the state of delivery, and we have a reaction away. So once you see this price move right here, what are you anticipating? You're anticipating the down close candles which formed right here that came back into the order block and fair value gap to act as what? A propulsion block and a order block, which is high probability. And once you see this, you will draw out the order blocks which formed here, and then you will utilize them to identify order flow. Price trades into them and we trade higher. And the same thing happens again. Price trades into the down close candles and we trade higher again. So we are going to go over this in chart form. We are going to go over currencies and how you can find low resistance markets and how that ties in with order flow. However, right now I want you guys to understand how bullish order flow is formed and what it looks like. So we're looking at down close candles to support price to go higher when we are bullish. And this fractal is my favorite fractal. So if you guys want to study this, and it is fractal, so it happens on the weekly chart, the daily chart, the 1 hour chart, the whatever chart, it happens on it. So we have a down move. So this is the down close candle. We trade into a fair value gap and we trade away. And then I'm going to shade this in a different color so it's easier to see. So I'm going to go with a light yellow so you guys can see the down close candles which formed here. These are the ones that change the state of delivery. So once we have a confirmation that the market changes state of delivery, what is the confirmation? We make a high, price trades back into these candles right here. These are down close candles and we have a reaction away. So a lot of you listening to this video right now, you'll be asking what is a change in the state of delivery, and I'm about to explain that to you. A change in the state of delivery is when the market is bearish and we are trading to the downside. We have a change in the state of delivery where it switches from a sell program and we go into a buy program. And vice versa is done when we are bullish. The market is in a buy program, we're trading to the upside, and then we have a change in the state of delivery and the market goes into a sell program. So going back to this, once we have the change in the state of delivery, price comes back into here. This is what you are watching. You guys are watching the down close candles which formed right here because they will be sensitive at 50%. 50% is sensitive for these down close candles. So if price trades into them, we can anticipate a propulsion block. And if the market fails to trade into 50%, just know that the market is very bullish and it wants to take off as soon as possible. And that's how propulsion blocks form. And you shouldn't see price close below 50%. It's either at 50%, the bodies should not close past 50%. It's either at 50% or above 50%. And if we are closing nowhere near 50%, and expect the market to be very bullish. So that is my favorite fractal to look at, propulsion blocks on the higher time frame. However, if you guys want to understand order flow and you want to understand how to pick the right currency, you guys need to understand the order flow of the currency and which way it is trending. And this is how you can identify that. When you are bullish, you will look at down close candles to support price to go higher. And now let's go over a bearish example of how this forms. Okay, so this is the bearish example. Price is trading to the downside. However, we are going to break this down and we are going to look at this in much more simple terms that can help you guys. So you can see every time price trades higher, we make up close candles. So I'm going to shade this green for an easy understanding. And once price trades into them, we trade away. However, we are looking at this fractal first. So none of this has formed yet. So the price action all the way here, this isn't, and so the price action right here, this hasn't formed, only this has formed. So this is live price action delivery. And then how do you anticipate to know where the market order flow is? So you will look at the up close candles which formed here, and you will wait for a close below. Once we have a close below, we have a change in the state of delivery. Once we have a change in the state of delivery, what are you looking at? You are looking at the order blocks which change the state of delivery, and you are looking for a fair value gap. And this is a high probability order block. Two of my favorite types of order blocks are ones that take liquidity or an order block which changes the state of delivery. These are very high probability order blocks, so if you guys missed that, I'm going to repeat it again for you to write down. Two of my favorite order blocks to look for, and the highest probability order blocks are the ones that take liquidity or we change the state of delivery. So moving back to here, you guys can see that we trade into this level and we trade away. Once we trade away, we make more up close candles right here. And what should they do? They should support price to go lower. And not only that, this should act as a propulsion block. And what should we look for? We should look for 50% or less to be respected. And once that gets respected, we can know that the order flow of the market is bearish. And then all we are looking for is to play a continuation. So if you guys missed this entry, this is where the silver bullet forms. And what is a silver bullet? The silver bullet is a second stage of distribution in a market maker sell model or a buy model. and this is going to light up a lot of light bulbs for you guys. So if you have missed this entry and you missed the propulsion block entry, this is the highest probability entry. And why is that? Because this is the second stage of distribution, and it usually moves the fastest to a draw on liquidity. So once price is trading, once you see this price leg trading higher and we trade into the up close candles which formed here, this is a strong selling signal for you to look for sells, because we've had a change in the state of delivery. Price is traded into a propulsion block, we trade lower, and now we have the second stage of distribution. So this was the low risk sell, first distribution, and now we have the silver bullet. And this is fractal to every time frame, daily, weekly, 1 hour, 4 hour, whatever. This is what occurs, and this is what you guys should be looking for inside of order flow. I'm keeping it short and simple for you guys to apply to your charts, because there's a lot of people out there that like to overcomplicate things. So this video is going to be a simple approach. So the number one thing you guys need to learn is order flow, which I've taught. I've also covered a bit about distributions and what you can look for and where you should be looking for the distributions. And now we're going to go over the low resistance markets and how we can identify low resistance markets. And we are going to go over two types. We're going to go over a market structure standpoint, and we are going to go over a fundamental standpoint. So what makes a market low resistance? When you are looking at it from a market structure standpoint, we look at failure swings. So a failure swing forms like this when we are bullish, where price fails to go above these highs. So above these highs, we have liquidity. And the time these highs wouldn't have liquidity is when we sweep the highs. So this is where we've taken the buy side liquidity out and we've swept the highs and price trades lower. However, when we make failure swings, so price fails to go above this high and this high, this is what holds liquidity. And you guys need to be careful to make sure that these highs are not an SMT. So if they're an SMT, price doesn't need to go back into these levels. Why? Because we have already accumulated the orders which needed to be accumulated on the correlated pair. So if there's no SMT and you are bullish, this is what you look for. You look for price to trade into a key level or a PD array, price trades lower, and we have a change in the state of delivery. You guys are looking to buy the order blocks which have changed the state of delivery, which forms here, and this is the low risk buy, and you can target the failure swings for low hanging fruit. And you can target the failure swings for low hanging fruit targets. So this is a very simple diagram, and you want to look at the markets and you want to backtest this is what you can do. And you can blend your understanding of order flow and how to identify low hanging fruit targets, which are failure swings inside of the market, which are very low resistance for price to trade into. So you can backtest this gray shaded area. This is where price trades lower, and this is all bearish order flow. We trade into a key level, and price starts to reverse from that key level. What are you guys waiting for? You're waiting for a change in the state of delivery. Once we have the change in the state of delivery, price trades higher and we close above the order blocks which change the state of delivery. We trade back into them, and then we can target the low resistance highs, which are the failure swings. So this is when we are bullish, and this is a trade setup in itself. So this is where you guys can look to long. And even if you miss this entry and you see price trading away, you can market buy right here and you can target these highs. So this is usually a simple 1-to-1 or a 1-to-2 trade setup. And this is good for if you guys are scalping or you want to pass your trading challenges. With that being said, we are going to flip this and we are going to look at this when we have a bearish failure swing. So you guys can see this is how price trades. And we don't take out these lows, we make a failure swing and we trade higher. Where do we trade higher? We trade into a liquidity pool or a higher time frame PD array where we have a reversal. Okay, so we had the reversal. You guys are not looking to sell right here. Why are you not looking to sell right here? Because we've not had the change in the state of delivery. Price runs that high again, we trade lower, and we close below the order blocks which change the state of delivery. We trade into them and we trade away. So why are you guys always waiting for the change in the state of delivery? This is where you guys get your extra confirmation to look for sells and to trust your trading setup. Because if you are looking to sell, as soon as price trades into a fair value gap right here, we are going to run the high and price is going to trade lower again. we are going to run the high and then price trades lower. So how many times have you guys seen this, where you know where the direction of the market is and you look for an entry, you enter, however price stops you out, and then we trade to the drawn liquidity or your target. This is because you're not waiting for a change in the state of delivery. This is where we change the state of delivery. We close below the up close candles which traded into the liquidity pool, and then we draw them out. They are high probability paired with a fair value gap, and then we can look to target. The failure swings right here, and this is how low resistance failure swings form when we are bearish. So we've gone over a market structure standpoint of how to look for low resistance markets and what makes a market low resistance from a market structure standpoint. And now we're going to go a bit more into depth of looking at currencies and pairing up currency futures and pairing up weak, strong currencies to find low resistance markets. Okay, so you guys want this. You want one-sided move where price you enter and it trades straight to the drawn liquidity or where you want to enter. You guys don't want this. You don't want to enter and price is playing around your entry and eventually it stops you out, trades higher, then trades back into the range. This is known as a seek and destroy, and I'm going to show you guys how you can avoid this and how you can utilize. So the first thing you guys need to understand is you need to pair a weak currency versus a strong. So this is a W and you need to pair this with a strong currency. So how does this work? So we have a currency which is weak, like the euro. This is how it forms. We have a weak euro, and I've just typed that there. And then we have a strong dollar, and you can see that the dollar is trading to the upside. So how does this benefit you guys? This is how real low resistance markets form. When you pair a weak currency versus a strong, or a strong currency versus a weak. I don't care for a currency which is consolidating with a strong currency. I don't care for that. I don't want to look for a consolidated currency and then maybe it breaks out the consolidation. I'm stuck in a trade which is not worth my time. For me to find low resistance market, I want you guys to listen to this if you made it this far into the video. It is look for a weak currency and a strong currency and you'll mesh them together, or look for a strong currency and a weak currency and you'll put them together. So now we have a weak euro and a strong US dollar. So what does this mean? What does this mean for Euro USD? And I'm going to show you guys that right now. So we had a weak euro and a strong dollar. This is going to mean for Euro USD to be trading to the downside. And what do you guys utilize here? You utilize order flow and what I just went over. So this is Euro USD. And this is going to be a low resistance market because the euro is weak and the US dollar is strong, and we are utilizing order flow. So we wait for a change in the state of delivery. The market changes the state of delivery. We trade back into the order blocks which change the state of delivery. Now what? This is what we look for. A propulsion block. We have the propulsion blocks which form inside of here. Price trades into them and we sell off quickly. And now we have the highest probability area to enter. What is that? That is the silver bullet. And what is the silver bullet? That is the second stage of distribution. So say if you guys missed the low risk sell which formed here when we traded into the order blocks which change the state of delivery, you guys missed the first distribution. You wanted to see confirmation that the propulsion blocks are going to hold. You can trust the silver bullet to offer a setup and clear the original consolidation or an area of liquidity. So why did this all come together? Why did the market structure come together? Because you found a currency which was weak and you found a currency which was strong, and you paired that up for a forex pair, Euro USD, and you found a perfect setup. So everything came together to find a high probability market. So now, how can you analyze this on a blank chart? So how can you identify this on a blank chart? And we are going to get into that, and we are going to go over how you can identify all of this on a blank chart. Okay, so this is a chart of GBP. So this is the futures for the Great British Pound. So the symbol for this is GB1 exclamation mark. And now this is what you will analyze. So you'll analyze a individual currency alone. And from the 24th of April, this is what we are going to look for. You guys can see price trades into a key level and we reverse away. So you guys are not looking to buy here. Why? Because we have no confirmation that the market is not just trading higher to go lower. And what do we wait for? We wait for these down close candles to be disrespected and price to close above them. And what do we have right here? We have a closure above the down close candles. Once we have a closure above the down close candles, what is now important? I want you guys to answer this now. We have a high probability order block. So we are using these 3 candles meshed together as an order block because there was no other green candle which closed inside of them. So these will act as one order block. And for order blocks, I don't like to use the wick. I like to use 50% of the wick, or I like to use the body. And here, over here, we trade into the order block and price trades away. So what does this confirm? This confirms a low risk buy, and this also confirms the change in the state of delivery. So once we see this, what do we have right here? We have a buy side liquidity pool. So before all of this even happens, this is what we are looking to target. And what are we looking at? We are looking at a down close candle. So now what are we looking for? We are looking for a propulsion block. So this down close candle right here, this should support price to go higher. So we should not violate 50%. So over here, we violate 50%, price trades into the order blocks which change the state of delivery, and we trade away. Once we trade away, look at this candle. Look what it does. It trades into 50% of this. Once we trade into 50% of this, it reacts away quickly. This is because it's the propulsion candle. So the algorithm over here wanted to reach into the down close candles, which change the state of delivery. Once it did that, we trade away. And once we trade into the propulsion candles, this is what you guys are looking for. So this is the low risk buy. This is the first distribution inside of the propulsion block. Now what do you guys wait for? You guys are looking for the silver bullet. So we will draw out a dealing range from this low to this high. So why am I using this high and this low? So this was the most recent low that was made inside the price swing that traded higher. So this was the impulse low, and this was the swing high that price traded lower from. Once we traded lower, where did we trade into? We traded into a discount and a fair value gap. Once you trade it into a discount and fair value gap, what is this? We went over this at the start of the video. This is the silver bullet and the second stage of distribution. And what does this do? If you guys were listening at the start of the video, this clears the buy side liquidity pool, which is above here. And you guys can see we just have a strong momentum move to the upside. So once we look at this fractal, you guys can see from the 24th of April, the GBP was bullish. So how can we use this to our advantage? So as we've analyzed the GBP and we are waiting for the silver bullet to form on the 26th of June to the 1st of July. So we are waiting for GBP to expand to the upside. So this is before any of this movement happens. We are going to look at another currency which was weak at the time that we were looking to buy the GBP. So from around 27th of June to the 3rd of July, we will look for a currency which is weak because we already have a strong currency. So we're looking to buy the GBP and we're just looking for the second currency to pair it with. Okay, so right here I have the Japanese yen futures. So this is a weak currency. We found a strong currency which was the GBP. So I'm just going to write that out, GBP. And now we have the JPY. And now let's analyze this. So you guys can see these are our up close candles and we are not looking to sell right now. Why are we not looking to sell right now? Because we have no change in the state of delivery. So once price closes below these up close candles, which we get right here, we can look for selling opportunities. And now what do we look for? We look for our propulsion candle, which is right here. So price trades higher, we trade it into 50%. So we are not looking to sell here. We are not looking to sell here. We are looking to sell right here, the return into this fair value gap. Why? This is the low risk sell. This is the first distribution when we trade into the propulsion candle, which is right here. So these are the order blocks which change the state of delivery. Then we have our proportion candle, which we trade into. Then what do we have? We have a fair value gap. And what is this? This is the silver bullet. And the silver bullet, what does it do? It clears the liquidity below this low and it moves the fastest to the drawn liquidity. And you guys can see from the silver bullet, we sell off aggressively. And once we have this sell off, we are going to mesh together the GBP and the JPY. So we have a bearish bias. So before these down close candles form, we know that the JPY is going to be bearish, and the same with GBP. We know that it was going to be bullish from the silver bullet. So everything is coming together, and all we do now is we move on to the currency pair, which is GBP JPY. So we look at this from the 11th of June. Okay, so over here, this is GBP JPY on the 11th of June. So look at this price action. It's one-sided, and it's also what? It is a bullish order flow market. And it's also another thing. What is that? It's a low resistance market. So you guys can buy. Once you're in a long, price is just trading to the upside. Why is this? Because we had a strong pound and a bearish JPY. So how can you guys trade this? Well, we have these down close candles right here. What are we waiting for? A change in the state of delivery. Price closes above. So once we close above, what do we utilize these for? These are high probability order blocks because they change the state of delivery. So we utilize 50% of them, and you guys can see how sensitive it was. So if you're using the wick, you can see how more sensitive the price action was. However, I like to use the bodies, and you guys can see we bounce straight off 50% and we trade away. So this is how you guys can find low resistance markets and what is actually going on inside of the Forex world. Because you guys can't just trade a random Forex pair. You need to break this down. You need to strip this down. And what I just explained to you right now, it's a gold mine and it's not out there. Most of the educators out there don't know this, and I've just gave it away for free for you guys to understand. Okay, so coming back to our checklist, at the start of the video, I taught you guys how to select the right currency pair. What makes a market low resistance? We just went over that. And how to analyze a blank chart? We just went over that because we are pairing up everything that we've learned for part 3. So all of that comes together. And we also went over how to execute and enter. So I'm going to show you guys that again. We are going to go over that. And then part 5 is the bonus. And once you comment PDF, you guys will be sent a PDF to study. And I want you guys to tag me in what you find inside of the market on Twitter, and I will retweet. Okay, so now let's go over entry and execution. So now let's go over how to execute and enter. So this is very simple. I want you guys to focus on one thing and that one thing alone. And what is that? That is focus on the silver bullet. That is the second stage of distribution that I've been preaching this whole video. So what is the silver bullet? The silver bullet is the second stage of distribution in a market maker sell or buy model. So for example, we have a market which is trading to the downside. We trade into a higher time frame PD array, which is right here. And then we have a reversal to the upside. Once we have the reversal, what do we wait for? We wait for a change in the state of delivery. We get the change in the state of delivery. Then we have our first distribution. After the first distribution, what forms? The silver bullet, which is the second stage of distribution. And what are you guys waiting for and looking for to enter here? So once we've had the change in the state of delivery right here, this confirms that the market wants to go higher. For extra confirmation, we are looking for the low risk buy to be respected. Once the low risk buy gets respected, we are looking for the propulsion block to support price to go higher. Once the propulsion block supports price to go higher, we are looking at the silver bullet. This is where you guys will enter. And how will you enter this? You will enter this by looking at mitigation blocks. So a mitigation block that formed on the left side of the curve. So a mitigation block is where smart money can come and mitigate their orders. They can mitigate their orders or they can add positions on. And this is very high probability, and this is how you will enter. You will buy long right here with a stop loss below the first distribution or the low risk buy, and you will target the buy side liquidity. And you will target a 1 to 2, and you will target a minimum 1 to 2. And this is the highest probability way to enter inside the market. And I'm going to show you guys an example of this on the chart right now. Okay, so if you guys look at this fractal right here, what happened? We had a run on sell side liquidity right here. Once you ran out the sell side liquidity, what do we have? We have a buy side liquidity pool above this high. Also, what do we have? We have low resistance market structure. We have failure swings. So this is a failure swing, price failed to close above this high, and the same goes all the way over there. Once we see this, what are we waiting for? We are waiting for down close candles to be disrespected. So we have this down close candle right here. Once we close above this, we can confirm a change in the state of delivery. So price is trading back into this down close candle. What do we want to see here? We want to see price be sensitive, and once we are sensitive, we trade away. We take out the first set of failure swings right here. Once we take them out, what are we looking for? We are looking for the first distribution. And where does that form? That forms inside of this down close candle right here. And what is this? This is our proportion candle. The proportion candle supports price to go higher, and now what do we look for? We look for our silver bullet, and the silver bullet formed inside of this fair value gap. And what else do we have overlapping? We have our mitigation block. So these up close candles right here, they will support price to go higher, and this is where we can look to buy. Our stop loss will go below the first distribution, and we will target the buy side liquidity for it to clear out the original consolidation. And you guys can see we trade into the fair value gap and price starts to trade away. And this is how the silver bullet formed, and this is a complete guide of you guys to trade inside of the market and what you should be looking for to help your development. So this video, I could have charged a lot of money for this. However, I decided to give it out for free and teach you guys for free. Like every single one of my videos, they are short and concise and to the point. I tell you guys the information that you need to know, and I tell you the information that has made me money as well. Like if you go inside of my Telegram group, I have shared the money that I have made inside of the market. And if you guys go on my YouTube channel, I've showed you guys my payouts. I've showed you guys funded accounts that I have passed. So I'm showing you guys these things because I want to create independent traders, and I want people never to rely on someone again. And for me to be able to help people around the world make money, that brings a smile to my face. And if you guys have made it this far into the video, leave a gem emoji in the comments down below so I know that you've watched it all the way up to here. And I will be picking some lucky winners that watched it all the way up to here, because I do appreciate your support and I do appreciate you guys putting in the work to learn. For you guys to take initiative and watch to the end and study what I've taught you guys. So with that being said, I'm going to conclude the video right here. If you guys have any questions, don't hesitate to reach out, and that is a wrap.